2013, and they achieved 513 million. So just to give you a flavor of the split, because it's a question that many investors ask. The dividend per share, there's not much to dwell on there. We doubled it because our profits basically doubled, and shareholders still not happy, they want more. But that's within the policy. You know, our policy is 25% of the profit, and we actually gave 26%, but still. Anyway, this is a summary balance sheet. You can see shareholders' funds increased from in 2014 from 6.7 billion in 2013 to 7.3, so basically 700 million improvement there. The non-current liabilities just includes in 2013 a long-term debt in 2013, which we repaid, and so there's hardly anything there now. And you can see when March came, most of that debt is paid now. This is just some deferred tax or some liability like that. Current liabilities is where our borrowings are. You can see we were very high in 2013, 20.7 billion. This one is accounts payable, borrowings, everything to do with current liabilities. And in 2014, it dropped to 16.3, mainly because of debt repayment. And you can see the strong drop in March by another further 3 billion. And again, mainly due to borrowings repayments. I'll show a slide on that shortly. On the non-current assets are mainly the fixed assets, basically, and also includes the deferred tax asset of the loss. In most countries, when you incur loss, the revenue allows you to carry an asset to offset future profits there. But you can see this coming down because obviously as we make profit, that asset is being used, so we just knock it off against there and we don't actually physically pay the taxes. The current current assets include, it's the inventory and the receivables. Those are the big amounts there, and you can see in 2015 March we closed with very, very low inventory actually, and that's why it dropped from 15 billion to 12 billion. It's mainly the inventory. You can see here, and that's what I meant when I was mentioning the current liabilities about the borrowings. You can see our net borrowings in 2013 was 13.6 billion. It dropped to 9.4 at the end of 2014 because of repayment of loans mainly. And then now for the first quarter, we've achieved even a further drop of 3 billion. We've actually, in addition to lower borrowings because of the lower oil prices, we actually have repaid quite a lot of debt as well. I'll show slides on that shortly as well. This reduction in debt has actually helped our gearing ratio. In 2013, we had 67%, 2014, 56%, and in March 2015, it was 46%. So it's a good progress. And like David mentioned that we were working for the banks here, you can see 67% gearing ratio, not a very healthy situation. So we're on the right track to reduce our borrowings. So the shareholders' funds is just something that you saw on the balance sheet, the improvement there. The market cap is basically just the shares times the share price. And this share price was low at the end of 2014. It was a bit higher in 2013. This big spike was when Puma was around and all the investors were speculating, I don't know, but the share price was very, very high then. It was reaching the 15 shillings per share level, and that's why that was so high, but it was abnormal, I would say. Well, abnormal compared to the trend. We still feel that the share price puzzles us a bit because, with the improvement, you would have expected something different. That's just the return on capital with the improvements. One would expect this trend, which is very good. This is the gearing ratio. As you can see, very high in 2012, 69%, progressively coming down, and we're really very proud of this achievement because it's this one, everybody will know it's a tough one to reduce, so a very good achievement so far. So this is the net borrowings, as I mentioned, 13.6 in 2013, dropping to 9.4 in 2014, and now we closed our first quarter with 6.5 billion, and for April it's come down even further. So this net borrowings will for sure come down and help our gearing ratio, will help our current ratio, and of course the financing costs. So this is the borrowings that I was talking about, and this is just specifically Kenya, and we focus on this because it's the biggest quantity of borrowings. So if you look at very high levels that we were borrowing in April 2013, we didn't even go as far as 2012, but we total borrowings in Kenya shillings and in dollars, but expressed as dollars, we were at $169 million. So with time, over time, and the repayment, especially here, you can see from about September, October 2014, we started repaying quite a lot of debt, and of course in this area with the lower prices, it also helped the dollar liabilities come down. But essentially you will see on the shillings there's concrete repayments that came down. So as we're standing today, our total borrowings now is $67 million. Now if you think of the $167 million levels that we were about 2 years ago, and now we're sitting at 67 million. It's quite an achievement. So if you look at the USD, these are now purely product. Okay, in the $107 million that we had in 2013, we also had M&A loans. The banks that were financing us will remember those days. We had M&A loans, and we also had some borrowings for the hedges that we had. But we've managed now to bring that right down. Today, our dollar-denominated borrowings in Kenya is 28 million. So a significant drop there. And like I said, and this is now purely product financing. We don't have M&A loans or anything like that anymore. This is the Kenya shilling one, where we were at 5.2 billion in April 2013. And with time, okay, as we were repaying the dollars, we couldn't really repay much on the shilling, so it was hovering around these levels. But now concerted efforts have been made now since we repaid most of the dollars, started tackling the shilling borrowings, and you can see the progression coming down, and these are actual repayments. It's got nothing to do with conversion rates or exchange rates or anything like that. So as at today, we're sitting at 3.7 billion shillings from high levels of 5.2 in 2013. And we still need to crack that further down. We've got a target to bring that down to more, to OD levels that will be more befitting to our level of business, which will be much lower than the 1 billion.
We are there. We are every morning. We are doing our cash flow. We are on this slide. This is the one we are cracking. Up to December 2014, we were on the dollar-denominated loans because we were busy repaying the M&As and any dollars which are not representing inventory. Today, you cash your inventory, you cleared all the loans, and to be frank, it's mainly with the international banks, some of them seated with us here, and financing those cargoes. So, and that's what helped us when I'm telling you fixing the basket, and we almost, from the moment we started this exercise, the worry was the exchange rate and the exchange losses, and we were just lucky that the shilling, the time we were paying, the shilling was not very erratic as of today, that is losing badly. So luckily up to December. From January actually, we started this Kenya shilling exercise, and I can tell you it's a daily thing. Most of the local banks are seated with us. There is no bank that we have not visited this year from CP while repaying the shilling, and the idea is to pay as much as we can to reduce Kenya shilling borrowing, and a lot been done. We are still averaging down the cost of finance on the existing loans. So we are in the market talking to all local banks, and we keep, and the chairman mentioned it, but we keep this as the most important partner in our business. We can't do without banks. So it's a strategy that we did with the board, and we are executing it, and it pays itself. Look, we were on those highs when we are talking about total borrowing around 160, 170 million dollar, you talk about close to 160, 170 million shilling payment every month, only finance cost. I can tell you in April, Peter, we paid, the total finance cost was 47 in April, just last month. So almost 100 million, 120 going back to the P&L, and this is the reason you see the GP jumping. And I'll tell you frankly, we see it at the end of the year, a total finance cost should not be above 30 million shilling a month. If we'll achieve it, by mid-June next year, I see us resolving all the issue of the Kenya shilling borrowing completely. So we'll have some facility of $500 million for taxes and whatever, you go in and out as you wish, but then once we finish with the shilling, we go back to the dollars again, and we'll stop financing each and every cargo with bank, we just pay, and again, it will give us another edge against the fluctuation of the dollar, because you book less cargoes with banks, so you'll be less vulnerable again. So it's a cycle. The intention is to go back to the dollars just to finance less by banks.
It's a tough one, but really we have to do it. Okay, this is the current ratio, and this one we know that it should be above 1, and we're heading there. In fact, I think we're just waiting for the April consolidation to come out, but we're nearly there. This one can only be cracked with the repayment of borrowings, because our level of current assets are very much, the inventory is low, the debtors are low, and the payables are what they are. There's nothing there, accruals that we have that needs to be reversed. Our books are very clean in that respect. So the thing that will help this ratio get above the 1, which we know we are aiming to do it, is to reduce the debt, and that's what we're aiming to do. And this one just actually supports that. If you look at the working capital, which I term as just inventory, receivables, and payables, which is this orange bar. So this is what we are using as our working capital in the business, and our borrowings are at that level. We have to bring that right down to actually match that, and then we'll be okay. So we need to actually address that, and that's what we are doing now. The inventory levels, as I said earlier, we actually carrying very, very low inventories, and it helped us a lot when we had the contango, the backwardation market, and the prices were falling. But still today our inventory is very low, which first of all it helps to keep the level of borrowings low, but also with the prices, they tend to be a little bit volatile at the moment. It's better to actually manage your inventory more closely. So just the banks that we deal with are, as you can see, we've got some offshore banks, Societe Generale, we've got, I'll just go through the offshore ones quick, and then I'll go back to the local ones, Rabobank, MCB, Mauritius Bank, Commercial Bank, and then BNP as well. Those are the ones that we are mainly we deal with. And then the local ones, we've got CFC, Stanbic, NIC, Bank of Africa, KCB, EcoBank, and CBA. And then at the bottom, you can't see it, there's also commercial paper. The commercial paper is also part of our funding. It's one of the items in our basket that we've also been tackling, because we also found it quite a difficult area to manage when the amounts come due. So we're actually tackling that as well.
First, allow me to start thanking the board. I think we have a great board members led by the chairman. They helped us a lot. We are meeting often, and the chairman is super involved. Needless to tell you, he's an oil man. He's doing other things, and he was in Magadi, but his roots are in the oil business as the MD of Caltex, so he helps me a lot. And the other board members, which predominantly Daniel in his background of audit, which is a very active member, and Terry, which is a banker, and you see all the strategies on the financing. He helps a lot. So the board, for sure with Pat as a member, helps a lot, and I can tell you a lot of engagement, and thank you for that, Chairman. And I'll tell you, there is, I don't know why they went as one group, but There is the management team mixed with senior accountants and managers there. I'll tell you, I'm blessed. I have a great team there. If you think the job has been done on this board, you don't know how Ken Kobil has been managed. There is young, talented Kenyans here, and they're the ones actually doing, me, I'm making the noise, but they're making the things to happen. There is our trader here, Patrick Mutiga, Martin, supply manager, inventory. Remember, inventory, you see the numbers, it added a lot of value over the last 1 year. Remember how oil prices crashed. So people are doing it. It's nothing to do with me, I'm guiding. So credit to this team, and thank you very much, guys. So I touched the inventory, and you saw the numbers. You know, market has its own ways. Oil prices are going up, and you see some correction on the dollars-denominated loans, so we are reacting to that. But we saw that crash that happened over 2014. You can go and check minutes, and PwC are here, and they are accessing all this data. We saw it around March, Feb last year. I was talking a lot about oil prices crashing, so we were preparing ourselves over the year. When it happened around September, mid-September, nobody was off guard. We saw it coming. We were on neutral position. Then we went short, and a lot of the value, when you see 9-10%, in Jan, I think we were 12% GP, by the way. Jan alone is 1 month. We recorded, it was an amazing month. Jan 2015, a lot to do with the inventory management. I can tell you I'm putting a lot of time on that with Martin and Mutiga, the supply manager and the trader, and it worked well. Remember, you need to manage fuel oil, jet, we are big in that. We still with Rabbi, 10-12 million liter a month. Jet, we are the biggest, I think. Yeah, 22-21 million liter a month every month. It's quite a lot of inventory you need to keep. You don't manage it, all formula-based, all on dollar-denominated payment. So those accounts you need to manage well, and I can tell you, Jet, we have not split it that way, but Jet contributed, and Maina, the aviation manager, seated there. Jet contributed a lot, and it's an area that in 2012, I think we lost, I know we lost 1 billion shilling. So it was a profitable business, around 600-700 million in 2014. Jet aviation, it's area I can tell you, guaranteed, whoever published in the stock exchange, they are all losing money still to that in this area. You don't perfect the inventory, you lose money. On OTS, a lot been said by the chairman and Pat, but I can tell you we just recently, some of you knows because at least one of the banks seated here will finance this cargo. We just won Jet last week. We are loading the ship OTS Jet cargo, 62 KT, 67 KT, depends on how it will end up, how much you opened. 62 KT, and again, it's an OTS. We are more selective on the OTS. In the beginning, we ran away from it. We participated in all tenders, and every month we are tabling numbers, but we are just cautious with the exchange and the profitability. And I can tell you, recently, I'm getting more appetite to it. Again, not to go to 2012 numbers. And if I'll say it, my chairman will jump and stop me. We are very cautious, not going back to what we were doing, but we aligned some suppliers which mainly supporting us now in fuel oil, and we won with them now the Jet, some sort of, and I was meeting this week some bankers which seated here, and I was explaining some of them even going with us open credit, BP Singapore, Shell Dubai, things that we never saw, by the way, in Ken Kobil. We never traded on open credit. It was always against LC. But you see, they see the change and they feel more comfortable. They see how we are managing Rabbi. There is more appetite, let me put it that way, on OTS. We have more tools to be more aggressive. But again, we'll go only when we'll make margin and profitable. And that ship, or this ship that's coming in 10 days or 12 days, we are happy with we analyzed already, we are doing it in advance, we know exactly how much we make after the LC, so there is no surprises here. It's a business that we will watch more carefully as other items we managed to fix, and we are more ready for trying to be slightly more aggressive on OTS, and it will help us. All the variances you see on stocks, when you see Total, Vivo compared to Kobil, I can tell you it's on the OTS numbers. They are winning tenders. Vivo has Vitol at their back. Total has, they're having the new refinery in Saudi with the Saudis, so all the products are coming from there. And when you see them jumping 4 points, 6 points above our market share, it's nothing to do with the trade itself. It's OTS, and again, whoever checked the Total numbers, and I'm sure some of you did it, when I'm telling you, if you go and factor back the cleanup exercise that we did 2014, and there is a reason why we are doing the cleanup, and I'll explain. Our numbers actually tied. I can tell you, we actually, GP-wise, we performed better than Total 2014 because we have some issues to do with ESOP, so we decided to take with PwC conservative approach. We had some steel stocks that we decided to clean in KPRL, all the yield shift and all the slogans that we were using or jargon that we were using in the past. It's something that still when we make profit, we go back to our books and we clean up for future, and I'll talk about it. Assets disposal, we have not done much 2014, and I'm happy because the results are better. In 2013, we did a lot, almost to a level of 1 billion shilling. I think in 2014, it was 170, 180. But there is, in Kenya, we don't do much, or we are not going to do much in 2015, if at all. But there is a chance that in subs, we'll dispose here and there assets. We are working on something. I have nothing to announce yet, but it's something that you notice Kondo is not with us. Kondo is not a manager that will skip a session like that, but we are working on some assets which are, again, not performing, not in Kenya, in other, and again, it's in an attempt to get cash, pay debt, and again, focus on countries and focus on business lines which are profitable, where you have in a country 2 terminals and you can do with 1. So the intention is to drop 1 terminal. When you go and see stations that hardly performing in terms of volume and somebody is interested to buy them, and there is some transaction we are working in Uganda, and you see the amount of money you can get, we go and cash those assets, get the cash again, pay liabilities, and get better where you do better. So assets disposal is not over. It's something we are still working. It's just some of the deals are more complicated, requiring more efforts from our side. I can tell you we are in it deeply, myself, Kondo, Pat, guided by the board. Finance cost is a long journey. I'm happy to be in that journey. It's a cash flow thing, which I'm participating for the last almost 2 years now, daily. Cash is the backbone of our business. If you don't manage it well, you can end up with problems. So every day, 9 o'clock, some of you we are talking when we are buying the dollars knows that I'm there. And we are managing, I can tell you in a simple statement that every excess, even if it comes, last week we paid one of the banks 4 million shilling. We had excess of 4, we had no liability to pay anyone, we send him 4 million shilling. This 4 million shilling will never come back as a loan, not on Kenya shilling. You can end up borrowing more dollars if oil prices will go 100, or you decide for some reason to increase your inventory, which we are very careful. Again, board is involved on that. So shillings, it's a war that we declared it, and we want to be only with an OD, and I promise you, I promise my team, and it's something that everyone, there is a committee every morning, me, Pat, Martin, and the treasury lady, she's on leave, and she deals with you a lot, Mary Mutungi. 4 of us are meeting every day. First thing, what the requirements for the operation, what we need to release, what we need to send to which bank. This one gets priority. Then the excess, it's liability to suppliers, and the excess goes to pay banks. I can tell you, January, we paid close to 500 million in 1 month, just purely collection that was done every day. 500 million in Feb 270. It went back to 380 in March, 180 or 200 in April. And as of this morning in May, we are heading to 100 million. I believe it will be at 250. So as you see, we are putting a target for each and every month, depends on liabilities, and we believe up to the end of the year, we'll clear at least additional 1.6 billion, if not more, by December 2015. You saw 3.7, just work out the numbers. Again, the target is to have 750, half a billion OD, and that's what we'll have on the Kenya shilling. In Kenya, we changed the strategy this year, and it's good for you to note. We are focusing on sites developments with a lot of non-fuel, Mary handling it, mainly with Insco, priority to Insco, the Pizza Inn, Chicken Inn, and the Galitos. So we are doing South Sea. If you go South Sea on Mama Ngina Street, you'll see the station being brought down. We are reconstructing it. It's a complete rebuild with a bank on top and restaurant. That in South Sea, it will be with the big square, that burger thing. And then we are, Kyoko, where is the, Kyoko, the operation manager? Thank you, James. South B, we are about to hit the ground in a month's time. We are doing South B, it's opposite the Kobil, opposite Mata Hospital. Again, it will be with Insco, the Chicken Inn, Pizza Inn, and again on top, Mary will be a bank, yeah? So those two sites, it's for 2014. We are going to put this year a restaurant with Insco, again, the Chicken Inn, Pizza Inn on Makutano. We'll not do a rebuild, we are just doing a restaurant building for them. There is now works about to be completed in Matuapa, in Mombasa. Again, Chicken Inn, Pizza Inn with the Insco group. And we are probably towards the end of the year, beginning of the first quarter, we'll do Narok with Big Square, and nice for the tourists. Hopefully we'll see them coming back soon. But Narok as a town, I can tell you there is a lot of business there. So we want to do a nice stop point for them. And generally in Kenya, the idea is takeovers for this year. Eugene, the marketing manager, who is Eugene, is there focusing on that. We took already a few sites this year. If last year the takeovers, which amounted to 37 sites on 2014 was in Zambia, not much, but Burundi and Rwanda and Kenya. This year we are giving more focus to Kenya, allowing Burundi and Rwanda to stabilize. Needless to show, you know what's happening in Burundi now. So we are more cautious and more allowing them to mature the sites. In Kenya, we have more muscles, so we are more aggressive this year in Kenya. And I hope Eugene will do 10 sites at least this year. It's not a small number. So sites development and focus on niche product as non-fuel in this case, it's going on in Kenya in a big way. The Forex, we said that we are not happy with 20, it's not a number that we should be happy with. The 367 million was too high. We put a target at the beginning of the year of 100 million, all being equal. Look, I don't know where it's heading from here, from the 90, almost 7 level. Yesterday it hit almost, again? Yeah, from those levels, I don't know where it's going. You bankers should know better, but it's something that we are watching very carefully. Peter Maura, the head of finance for Kenya, is monitoring it closely with the treasury team. The idea is to control it, and again, some of the actions we are doing in the group is to deal with some of the Forex losses that in some of the countries. We are disposing some of the assets, by that clearing their dollars liabilities and shifting all of them to local currencies, again, mainly Uganda and Tanzania. On the subs, there is, as you see, the results are better, but was a lot of focus. We traveled like hell in 2014, me and Kondo. Pat and now accountants are traveling in Guni, a lot to Uganda, Chege to Rwanda, Burundi. So we are visiting subs more often. And I can tell you the main challenge is subs management. We are focusing mainly now mobilizing Kenyans. We have one in Zambia. Michael just moved 3 weeks ago. Martin Mina will be moving. He's an accountant. He will do accounting for us in Zambia also. We have a Kenyan young man, was the depot manager in NJD, moved to Uganda. He's a year there. So we can see a lot of fruits by using the Kenyans, which talented Kenyans, I must tell you, and it pays and it works better because they know the culture of the organization, and this is the way we are less on the expatriate notion, let me put it that way, and more expatriates, but produced from Kenya, guys that we know, guys that not necessarily many years with us. Michael moved to Zambia and he's 3 years in the company. He was with Mary in lubricants. It's an area that we want to focus in Zambia. The boy, and I should call him a boy, he's a young man, has a lot of potential. We want to maximize and start developing. I can tell you there is some of them, we did them. Martin is still a young man. We invested in him 6-7 years. I don't think there is a supply manager in his level in the whole industry. And believe me, I know the Kenyan industry well. So we are putting a lot of efforts developing young, talented. So not everyone is happy, only the talented one, and we are investing heavily. And, you know, trying to use them works well. Uganda is profitable in the last 4 months. Uganda, we struggled with it almost 10 months last year, I can tell you. Tough market. In the last 4 months, actually, April, he made also money. We are making money. Same in Ethiopia. Ethiopia, in the last 4 months, we changed management. In the last 4 months, Ethiopia is doing good money for us, and mainly from lubricants. So countries that we thought that will be a challenge to turn them to profitability, suddenly they are there. And Ethiopia, it's a great story with what Amit in the last 3 months doing on lubricants and petrochemicals. It's nothing to do, by the way, with oil. Oil, you can't make money there. And nice profits coming from those subs. If it will continue like that, it can be a great year for subsidiaries. On the contrary, we have the story of Burundi. I hope it will end quick. That's all. We mentioned that we are cleaning up the books. It's a big exercise, a big task for me. And again, I don't need to mention that Puma was here and left for good and bad reasons. I'm not going there. The bottom line, Puma deal bounced. But again, shareholders proved by their action that notion or that intention to try and have such a deal. When it will happen, if it will happen, it's not my call. You know, I'm not a shareholder. I insisted not to be a shareholder. Andre here, some of them know my contract. So I'm staying as an employee. But when shareholders will decide maybe in future to take such an action in 2-3 years, we want to be ready with to simplify our books to the maximum we can. And needless to say that if we were coming and leaving some numbers which are not justified in the books and coming and reporting 1.6 billion, we had this number, and where is Peter Mwangi? He knows that we could easily come and report 1.5, 1.6 billion. We came to PwC, we told them, here we don't have the stock, here cylinders are not existing, those lubricants should be written off, they are off spec in terms of quality. Remember that I have another motive why we are pushing it. If I was reporting 1.6, this week we started paying we are about to start paying the dividend, you need to have this cash also moving out. It's something you also need to manage. So for sure, as shareholders will be just happy to get dividend, but remember it's a cash that we are paying close to $3 million in the next 2-3 weeks. You need to control it also in some way, so long it's up and it's moving. You know, we doubled it compared to last year. You don't control it too much. You go and borrow to pay dividend. I'm not sure that's what we want to do. We want to pay, but we want to pay it also in a controlled manner, so long we are within the policy. That's all. I was chatting with the PwC guy. He told me, David, you have a story to tell here. 20 is seated there. And I'm hearing this thing for some time. It's for sure a story. I'm just blessed that I'm part of this story. And the idea is to keep it. Employees are putting huge effort, young people that fighting for their pride to get back to what Kobil was, and I think we are there. And I'm feeling like 2015 going forward is just to strengthen and concrete, our position, and that's what we are doing. Nothing else. You'll not see risk coming into the business. We are running from risk. Whatever it's not clear margin, we don't enter. So a trader comes telling me, David, we can win the jet cargo. He needs to show the numbers. He needs to show how much we are going to make before we put the number. This is the way we are doing it, with assumptions on exchange. And let me put it that way, it works and works well. Again, I can only thank the board, the management, and you banks. What we'll do without you? We can't do anything. Thank you very much.
Thanks. I think, thanks, David. If there's anybody with some questions, please feel free to ask. It's an opportunity to engage now.
Given your big deferred tax asset, what kind of tax level do you target in the future?
How that are you talking about the amount or how we got to it?
No, like if you would give a number of your expected tax level going forward, if you were to utilize the tax asset.
Yeah, the amount in the, you can actually see it in the annual report. It's about 1.2 billion shillings still to go. So it's there as an asset to utilize any future profits that we make. We can just offset it against that figure.
Okay.
Hey, thank you very much. First of all, I want to say congratulations on the performance. My question is more related to the industry. David, you talked about retail expansion in Kenya. And I don't know what your view is with regards to the issue of alleged allocation with KBC, given that it's becoming a pressing issue now currently.
Yeah, it's by the way, it's a big issue. As of today, before coming, Pat was hearing me shouting with the ministry, look, we can't stop the corruption in Kenya. It's, let me start with that because it's bad at this level. But I can tell you this, what I like with the new administration, they care. They read something and they are calling. I got a call yesterday from the office of the deputy president inquiring why Kobil stations. We were dry yesterday on PMS. We are not willing to play games that others are playing because you start it, it never ends. It's just mountaining. And we are explaining, I was with the PS this morning, long discussion, and I'm about to go and see him, just to tell them, guide them what they need to do. But you know, different companies, different agendas, and look, the system, the industry has its own challenges. It's for sure, 50% of the PMS, and our main challenges on PMS is not to serve Kenya. It's a trading activity by the guys which are winning the tender on PMS, and it's mainly GAPCO and Total because they must evacuate the PMS from their refinery. So it's actually, they are getting extra PMS on account of the investors as us and many other, the Galana, the Gulf, Hashi, many local companies which are in pain. And I hope to the help of either the Office of the President, the Deputy, whoever will decide to assist us, and I'm on it, I can tell you full blast, will resolve this issue. There is things which Ministry of Energy created the systems which are not serving the land. So you see there is more PMS transiting Kenya more than we are consuming in Kenya. So our stations, us and Vivo, were badly dry this week, calls from everywhere, and you don't have PMS in the system. You know, if you have not gotten it, you can't get it. So I'll go and see the PS, and you know, we are trying to be polite up to a certain limit. We will not agree to be dry, simply.
Thank you very much. I think for me, it's this last slide that you've put up in terms of the group focusing on organic growth. And then the next, you mentioned alliances with multinationals. Could you talk a little bit towards what kind of alliances you're looking at, especially now that you are actually focusing on organic growth? And is that presumably because you are in a much better financial position, because I think previously there was ideas of how can you reduce the debt level? I think, is that the focus that now you feel you can manage that?
Yeah, you know, when I'm consulting some people, and Andre is one of them, and seated here, you know, we were just having this discussion like 2 weeks ago that we paid so much debt, is maybe time for expansion. You know, we are debating with ourselves, but you need also to remember what is the ultimate goal. And again, knowingly that 2 years ago Puma was here and was a big exercise and big noise and up and down on the share. So you need to have everything equal. So meanwhile, until we'll see where we are going, we want to reduce debt and grow internally. And this is the organic growth. And we did a lot in 2014, 37 stations in 1 year. If you work with the plug number and all leases entered 25 years and above, you're talking about $1 million per site. Just when you see the EBITDA growing by that much of almost 800 million, which is not small number, those 37 stations alone created that value. So we want to go this year in Kenya because we can see opportunities coming in Kenya and get another 10, 12, 8, and I think we added, 4, 5 already? So it's not some number that in the first quarter, and again, Eugene is doing it with his team, it's really, and I know on what they are working, something can be achieved. But to go now and borrow with this environment of the dollar versus the shilling, and go and enter now, and I'll tell you, for example, was, and again, whoever I'm consulting, was opportunity, for example, for $15 million in Djibouti. Oil Libya and Total had some dispute with the government there, and some 10 stations, 12 stations came up as an idea in Djibouti. Remember, we are in Ethiopia. So it's something we are looking, but to tell you that I'm feeling so comfortable that that's what I want now, to create an M&A that will trigger exchange losses, and again, that loop, we want to give ourselves more time before we go for, acquisitions and what we were used to hear. We feel like we want more to consolidate while expanding where there is opportunities. I can tell you there is, Pat talked about the Zambia depot. I can tell you we had, our guys were in a containers, whoever visited, and some of you visited Zambia. Our team was in, all the office block was a containers that metal containers, like 20-foot containers. We are constructing an office there for them because, you need to have, we have a lovely depot. We invested $6.5 million. That depot alone suddenly allowing us to import product from South Africa. So it gave us a dimension that in the past we couldn't do. And that imports also bringing big value. So there is many small things that we are doing here and there, but we are takeovers wherever there is, or developing of land. For example, I can tell you, on that organic growth, we have a nice piece of land in Haile Selassie in town. A corner site where our container, we are going to remove that container, that what we call quick saver, and they are already, actually, we have, this is next week. Yeah, development committee will see already a design of almost a 3-floor building surrounding the station with, again, the restaurants and whatever. It's a project of at least $2 million. But imagine how much value it brings, because from that quick saver that we have there almost in the middle of the road, because I think it's on the road reserve, we surrender that land because it's 2 pieces of land. And then we go to the corner where there is parking today, which we are getting rent. We could get some 300 million, and it was the plan initially when things were bad. But now we are not willing to sell it. We go put a proper station there with 3 floors, offices, restaurants at the bottom. And this project will be probably over June next year. Yeah. The board already gave us the green light to design it. And on the 2016 budget, it will be there. And it will be our main flagship project for next year. So it's not only takeovers, it's also going to a bank land that we have not disposed, and that land is ours, and develop it.
Okay, and just a follow-up. In terms of the value of your assets, I think you move back to historical accounting. So typically, as investors, we can't tell what the value of the assets is. What would be a nice ballpark figure in terms of
this part of PwC? I don't know. It's too complex for me.
When we went back to historic costing of the values of the asset, we reversed all those reserves that were sitting in the reserve section of the balance sheet. So the reserves at that time was quite a substantial amount. So we haven't done valuations of our properties now, but just to give you an indication, you should just go back to what we reversed that time, which was about 3 years ago, 4 or 5 years ago. So you just take that and you can do your own indexing of things. I don't have it here with me, but if you do that, you can get a good indication of what the value is.
What I can tell you generally on M&A and acquisitions, there is huge interest in Ken Colville. We closed 2012 with all the bad things that were there. But out of the bad things, always you'll find the good things. We managed to restructure the management team and generally management in Kenya and subsidiaries. And as things goes by, I'll tell you, it's from China to India to Africa to Europe to US. Interest is all over. We are getting inquiries, but we are not in the mode of doing anything on that front until whoever is with the shares will tell us to do. So interest, yes, but we are not active on that. We are not engaging any party. We are not wasting time on that. And as and when, if it will come in future, it will be done also in a different way, more as an M&A transaction with consulting bank. It will have a different flavor to what it was. It's nothing to do in the head office, will not allow people to the office. It will be with the staff, not court cases. We have ideas how to improve on, again, something that has not went well. We learned our case, and when it comes in future, I'm sure we'll do it properly. And this is the reason we are digging so much in our books to get them, in the court cases, to get them resolved. I think we were open as much as we could. There is nothing, by the way, that I believe in that. This is the philosophy. We can't do without you guys, the investors and the banks. So we gave you all the information we have. Actually, the quarter is quite strong, but I just got on the corridor the numbers of April. We are just waiting for Burundi with these skirmishes there or the unrest. We couldn't get the final numbers, so I'm about to get it, but I can tell you the 4 months with April, it's above the 6 months we reported a substantial amount. So we already covered ourselves for the 6 months in April numbers and with some surplus. And the big thing for 2015 is the finance cost. We are targeting 700 million from the 1.3. So on overheads, don't expect much. I need to release part if I want to save or myself. If I need to reduce overheads, we feel like we came to the level of 2.5, 2.6. The number will be somewhere there. There is expenses, transporters, there is things you can't do without. Although I believe, again, maybe will be a slight reduction, we see ourselves stagnant on a slight drop on overheads, but finance costs, be ready for 45% reduction by 2015. That's all. Thank you for coming. Thank you very much.